How I didn't become a successful trader. Welcome to part 2 of this series where I talk about what I think is essential to become a successful trader and my journey on that way. If you didn't watch the first video, maybe do that first. There I talk about what I think are the important things to focus on or keep in mind when you want to become a successful trader. And now in the second part, as promised, I will talk a bit about my experience on my way to become a successful trader, what phases I went through, what learnings I had, and yeah, what happened there, say it this way. Yeah, or maybe first as a preface to get a bit of a context, because my journey regarding becoming a trader started really early, I think 20 years ago or something. Okay, 19 years ago, during university already. So while I was at the university, I was super interested in trading, in finances and everything. And back then I wanted to become a successful trader already. So I started going into trading system, automated trading systems. I was already into coding and programming. So I researched a lot into that, but as a student, I didn't have any money, so it was all theoretical experience. So a lot of research in all the areas: money management, risk management, trading systems, technical analysis, all that stuff, automated systems, writing bots and stuff like that. So I had a lot of experience there. During the time at university, you always have time and curious. So I also programmed my own exchange. Nothing big, just to have the matching engine and everything, to understand how this whole thing works, how order execution works, what the order types are really doing and stuff like that. So I had a lot of context and experience in that area already 19 years ago. And back then I did a bit of trading with a bit of money, but back then I already had it was too much money for my net worth, say it this way, or I didn't want to take the risks, or I didn't feel comfortable to take the risks. So I didn't go in deeper into that back then. And also because I liked the whole thing about having real access to the exchange, level 2 trading, all the real order types, which were not accessible to normal traders or normal hobby traders back then. So I stopped there, but I had a lot of that experience, just as a preface to get it. And then I didn't do anything for quite some time. And then came 2017, where I came back to crypto and realized that on crypto, there you have now exchanges with real order books, real exchanges where the real stuff happens, no CFD stuff, but real exchanges. And I was kind of hooked, right? So I was like, now I'm working, I have the funds to start trading and to give it a second shot, basically. And I was like, okay, you can do, as a hobby trader, real trading on a real exchange in the crypto market. So I started second tribe 2.0 of my journey to become a trader. And there we start, or that's where I'm starting this story now, say it this way, of my journey, and that's where I learned the most, because there I really started trading with money and everything. And what happened? First, classic phase of gambling. Yes, I had all the research, I had all the theoretical experience. I knew how rookie traders lose money because of gambling, why they all fail, or a lot of them fail and everything. I still did it. I got in, I got on my phone, I had the back then Bitstamp, the app, and I traded positions in and out on the way, gut feeling, just jumping into positions on the minute chart, watching the chart tick around, getting the adrenaline and everything. So the kick out of, oh, it's moving, position up, position down. No plan whatsoever, nothing, just pure gambling on the phone. Only good thing from my previous experience was that I knew that I would likely lose in the beginning, or that it's, that it's risky, say it this way. And I was risk averse because I knew how it felt back then. So I did just small positions. And with small positions, I really mean dollar positions. So I traded $1 positions just to trade because I wanted to trade. I loved the trading. I knew it's risky and everything. And I knew you shouldn't do the gambling. But I did the gambling, but at least just with the small positions. So I didn't. Sometimes you win, sometimes you lose. I mean, it was 2017. Market went up. As long as you just opened a long position and waited long enough, you were in profit. So that's also bad for learning, for starting, because everyone is a great trader in a bull market. But that's how I started. That's how this part of the trading experience or trading journey started. Everything just gut feelings on the phone. Really, how you shouldn't do it, right? But I knew all this stuff, but I still did it because the emotions were bigger than the experience, say it this way. And that's why I'm so on this, always repeating myself regarding the emotions. New people underestimate it and say, no, emotions are not that big. And I got that under control. Let's talk after you tried it, because I know how they come back and haunt you. So this was phase one, gambling. During the bull market, everything went up. I thought I'm doing great and everything. And then, of course, crash came, bear market, and it's not easy anymore. And I realized that that's not the way. And I kind of came back to my experience that I said, okay, I know how to do that, and theoretically know how to do that, and let's do it that way, getting professional. So I started with all the things that I said in the other video, did a journal, started to document my trades, document my reasons for the trades, try to find a pattern and everything, or try to find a system. I realized that M1 is also the 1 minute chart is far too noisy for me. So I moved up to the M5, M15, 1 hour, 4 hour chart. In the end, I ended up with the 4 hour chart, but it's just me, right? Because there I had the balance between the noise that's coming in, and the signal to noise ratio, and the speed of the positions. Because I'm also, for trading, I don't want to, just me, just no financial advice or anything, just me. I'm like, I want to get into a position and not stay in this position for weeks and years or months. Then for me, that's not trading, that's investing, right? That's position trading, if you call it like that, or investing on long positions. For that's not what I call a professional a day trader. That's investor. It's also valid and everything, but if you want to make consistent profits over time and make a living from it, in my opinion, or for me, you should make profits every month. And it's a play of averages, right? It's a game of averages, or probabilities. Your expected value need to be positive. So over time, if you do enough trades, you should be positive. Short term, a few trades are always likely to be losers. So if you do 3 trades a month, you have a high chance that those 3 are your losers and you have a negative month, and I don't like that if I want to make a living from it. So I want to do, I don't know, a lot of trades in a month to have a chance that the average gives me a lot of positive months. Maybe sometimes there's a negative hint, but on the average, there's a lot of positive months. So that's why H4, so 4 hour chart, was something for me. Trading journal, I documented all the trades, tried to get professional money management and all the things. I mean, the money management, I already did that in the gambling phase with just the short positions, small positions and everything. There I also had kind of always a stop loss, but now in the getting professional phase, I also added always a stop loss, always have a target where you go to and all that stuff. So put all these things in, basically, that I talk about in the other video, and put a lot of screen time in. Watch the charts, watch the patterns, indicators, volume analysis, order flow, a lot, right? So I searched around and tried to find my way, tried to find my system, tried to find whatever works for me. Because as I said in another video, you need to find a needle in the haystack. And that's what I tried here. And the thing is, I found something. It took me a time. It took me a lot of learning money. As I said in another video, you need to be aware of that or expect that. But I found a system for me that was profitable. So took some time to evaluate it and everything, but even with backtesting. So when I found the system, I had like, that's my reasons, that's my pattern, that's my strategy. I backtested it by going through the chart 1 year and just on TradingView, you can do that pretty easily to say, okay, give me the next bar, give me the next bar, look at it, say, okay, would this be an entry signal? Yes, mark it, then play forward so you don't see what would happen when you do the signal, and then so manual backtesting basically. And it was profitable and it worked. So I did that and thought, great, I'm a professional trader now, and it works, and I will make money with that thing, and I will be rich soon. And then again, I know emotions, because I had it, and this is my real from my trading journal, the chart, so my performance chart. You see, it started this chart for this journal started 2019. So it took me already, I think, a bit over a year until I had this system in place and everything. And it goes, basically from April to end of 2019. So quite a time to analyze it. And in the beginning, it was profitable, and the Y, as I said in other video, is in R. It's in the risk reference. So you could count that now for easier understanding to say that's in percent. So within, I don't know, 2 months, I was up 30%, which is nice, which is good for a day trader. Small positions, I think they are traded a $100 portfolio. So, but as I said, think in R, execute the trades, and it doesn't matter if you trade a $100 or $100,000 portfolio. So this was all good, but I realized that I do trades that are not according to the system. I had a strategy, I had my system in place, and I had my system defined. But I realized that I'm not doing everything according to the system all the time. And then I decided to say, okay, I want to change that. And how can I change that? That I stick to the system. So I added to my journal a column where which was labeled, I think, according to system or something, and I just had to tick in yes or no. So because, I usually knew if the system, based on the trigger, I can say if the system is on. So when I opened the trade, not after the trade, not after knowing if it worked or not. When I opened the trade, I filled in the reason, I filled in there, according to the system, yes or no, and then did everything else. And afterwards, I did both analysis. I ran the thing where I said, okay, all the trades, that's the green line, the dark green line is all the trades I did. So that's my actual performance that I did. And the light green line is the performance of the system, of the trades that have the ticked is according to system, and all the other trades not. So it's not optimized and optimistic hindsight if I had done this trade that looked like the system or something. It's a trade that I did, and if I just had, every time I didn't tick the box according to system, if I just didn't open the trade, that's the performance, that's the green line, the light green line. And you see, the difference is a bit sad, say it this way, because as you see, I thought I'm better than the system. I thought I'm smarter, I can outperform my own system. I knew the system is positive, so keep that in mind. I knew from my own backtests. That was my system. I developed it and everything. Still my system. I knew it's profitable if you do it like that. And I still was like, I can outsmart that. if I open the trade now, I see already a signal forming. I see that there will be a signal soon, or there could be a signal. Not will be, could be. I saw there will be, but it's actually could be. And I'm like, if I open the trade now, I'm in early and get more profit, right? And did stuff like that. And in the end, you see what happened. And the really sad thing is that I did that, and every end of month I compared that. And every end of the month I was like, I should have stick to my system. I shouldn't have not done those trades that are not according to the system, like those two losers here. And I was like, next month I will do better. I now only do things according to the system. And the next month again, the system, my actual performance plus minus 0, the system would have been up another 20%. And continued like that and that and that until end of the year, where I'm decided to do things differently. So even if you have a system, if you know your system works and you have proof that your system works, and it would be as simple as not do the trades where you don't tick the box, my emotions still managed to get better of me and make my performance go from plus 30% and from a possible plus 50% in 8 months to actual minus percent, which is sad. So that's why I'm so on this emotions point. What did I do next? The thing is, I was like, okay, what can I do? Because I'm obviously not able to stick to that, to stick to my system and keep my emotions out of it. And by the way, it was not about position size or anything. It was just about, I think I can outsmart the system. I wasn't nervous about position size. I wasn't anything like that. It's just because outsmarting. I wanted to be better than the system and whatever. So dumb, just stupid. So what I then did is to say, okay, let's try to make it as hard as possible for me to not stick to the system. I developed an indicator that, I refined the system and everything to make it even more easy to follow, developed an indicator for the thing, and so an technical indicator I put on the chart that tells me exactly there is your entry position, there is your stop loss, and so on. And I even came to the point where I had it down in an algorithmic way to define the system. And I talked to my wife that she would execute the system based on so I was really close to teaching the system to my wife so that she executes it unemotionally, just sticking to the system because she has no emotions about that. She's just like, that's this system. I don't care what it does. I just do what's standing on the paper, right? I was really, and she was like, yeah, okay, I can do that. Why not? And I was then like, okay, let's write it down. I write down the rules and everything, and let's see where this goes. And the fun fact is that doing this writing down of the rules, doing this developing the indicator and everything, and with all that stuff, I realized that this whole thing, this damn system, can be automated completely. So first I had the indicator, and that's actually, I think that's when I redid it or reapplied it somewhere in 2020, 2022. But I started with this whole, so that the system started 2020 or something. And I had the indicator, and that's a trading view. I don't know if you know the strategy test and trading view, so you can do trading strategies in trading view and backtest them and everything. So I did it there to be fast because I wanted to see what's going on. So I implemented based on the indicator, implemented this system as a strategy in TradingView in PineScript, and realized, okay, if I backtest this there, it's profitable. 100% automated system, profitable. And I developed that 2020, and I think or end of 2019. And even if you applied it nearly 2 years 1.5 years later, it was still this possible profitable thing in the TradingView. One note to the TradingView strategy tester: yes, it's just a strategy tester. You can't automate it there that it really executes and everything. So there's stuff to do, but it's good for testing, and you're pretty fast testing there. And so I realized, it looks like this whole thing is 100% automated. And I had already had experience with trading bots and trading automated strategies and everything. So I decided to write a bot for that. So I did that in Python with access, so with connection to Bybit, with the inverse perpetual and everything, and really fully automated my system. By the way, if someone wonders, yes, this bot that I wrote is open source. It's in my GitHub repo, so anyone could run the bot. It's kind of a framework for bots for trading systems, and I have my strategy in there. And this is still running. So I started it 2020 and then worked on it and improved stuff. And I think until 2 years ago, I improved stuff. And I think 2 years ago, I stopped developing it, and it's just running now. Why I stopped developing, working on it and thinking on it in a minute, but it's still running, and it's still running over time in profit. But yeah, that's automation. I fully automated that, so my emotions don't get in the way, right? So on the one hand, my wife doesn't have to execute my trading system now, which is good for her. And on the other hand, I have a fully automated trading system. So everybody would now say, ooh, that's the dream, right? You have a fully automated trading system that makes profits, emotions out of the way, solve the problem. No, because I managed, and I don't want to say I'm proud, but I'm kind of proud because I think not many people manage to fuck up an automated trading system by emotions, right? Because that's what happened next. As you see, yeah, that's okay. First of 2020, I started this analysis or this bot. So that's again a real performance chart of my automated bot during 2020 until March of 2021. Just back then, I think that's where I wrote my Medium blog about the automated trading system and everything. And I took the chart from there. Again, this is in R, so in percent. There I already had a bit more than $100 on the portfolio and everything. And yeah, what I did there and how to mess up an automated trading system is there are a few things in a trading system, an automated trading system, that you can actually have control over. On the one hand, you set the parameters in the beginning, and then you decide how much money it gets. What's the risk, your R basically, right? And you have to decide what to do there, and then you have to decide if the portfolio changes, if you adapt that. So if the bot makes a lot of money, you likely want to increase the R, the risk, because you have a bigger portfolio now, right? And that's what I did, and that's not always the smartest idea, because on the one hand, sometimes I messed up and interacted with the bot, and if it's closed in the beginning, if it's closed the position, I was like, no, that was a bad idea to close the position. I reopen it, and it was still it would have been a good idea to close the position and everything. But I stopped that pretty early. But then the thing is that once it got up, it made a lot of profits, and I was like, I'm winning. I knew that the performance of the bot is volatile because it's an automated system. It's not perfect. It has ups and downs, right? I knew that. And still, I was like, bot is winning. I get FOMO. I want to make more money, because if I risk more now, it made money. I can increase the risk. If I risk more now, I get more money, right? And I managed to increase the risk on the top. So the R increased on the top. So the downside, and always after I increased the R, I had a lot of losers. Just a drawdown, normal drawdown. But because of that, I lost more, right? Because if you increase the risk on the top, your drawdown is more than the other thing. And I did that twice, exactly on the top. Then I did it once in the buy the dip on the in the equity basically. And then I had the bigger drawdown. And in the end, I first made 100% within a year. Yeah, it's pretty exactly a year. So 100% profit in a year with an automated trading system, which is awesome. I was greedy and I increased the risk during that and on the top, so that this drawdown that I had here actually took out all the profits, not only down to 20R, it took out all the profits compared to the initial risk and even down a bit. So in the end, I managed to mess up an automated trading system that's profitable over time. Yay me, right? Then I realized that that's also bad and I learned that, and now I know that you increase the risk. If you want to increase the risk, you increase it somewhere here, when you know your system, whatever, your strategy has a 30% drawdown, average max drawdown 30%. You may want to risk after you went up, after you had a good increase of your portfolio. Wait for a dip, because the dip in the performance will always come. You will have drawdowns. Yes, it feels like you want to risk more now because you're winning. Don't. Start to increase the risk when you are in the drawdown, because then it's easier to get out of the drawdown. If you don't manage to get out of the drawdown, your system is losing. So doesn't matter. But if you manage to get out of the drawdown, you get out faster if you increase the risk in the drawdown, not up here. You want to increase the risk here or here or here. Yeah, here theoretically yes, but in there, if you know the whole system, it would have been better to do more down here. So that's what I learned, when to increase the risk, and now the system is just running on small money because I want to know how it worked or how it works over time. It works good over time, but yeah, I'm just not capable of dealing with the emotions of having a system running or having trades running. So I decided to focus on less risky stuff because I'm not a risky person. Also something you learn, because that's what I think trading or learning to trade gives you the most in. Even if you don't manage to become a successful trader, you learn a lot about yourself, about your emotions, and how you behave, how you are. So do it. You learn a lot, but try not to lose all your money on it. Yes, and that's it. That's how I didn't become a successful trader, but managed to make a trading pot that I also messed up. If you have questions to that, leave a comment. If not. And with that, see you in the next video.